Hello traders, welcome on a daily analytical report with Alpari. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis. We have a calm day. Most of our recommendations, well, not recommendations, but our outlook presented yesterday on the daily analytical report, and our outlook presented by us on our Twitter account and our analysis on different portals. This outlook is working out, and the markets are moving the directions that we spotted recently. And on today's daily analytical report, we'll try to find more decent occasions for trading, and we'll take a look how those previous occasions, how do they behave right now. From the macro point of view, let me show you the calendar first. Here we have a calendar. I told you yesterday that calendar won't be very busy on Wednesday. Now we had the data from Great Britain, industrial production, manufacturing production. This data came better than expected, and as you can see, numbers are really good. Pound decline, this sharp downtrend on pound stopped, but it's not reversing, right? So there are bigger concerns about the Brexit, the way if it will be a hard Brexit or a soft Brexit, and this causes a decline on a cable and on pairs with a British pound. That data is not helping to reverse this trend, but is helping a little bit to slow it down. Apart from that, important data for oil in 3.5 hours, EIA crude oil stocks change, and also new thing in the calendar, Donald Trump news conference, which can have a huge impact on the markets. Most probably more on the stocks. Maybe he will mention some companies as he did before. But also this can have huge implications on American dollar. It will be very interesting to see this conference, which will be in 4 hours from now. So now let's see the charts. You know that on gold we are bullish. We start with the gold. Yesterday we started with indexes and oil. Today we will start with other commodity, gold. On gold, from the very beginning of the year, we are bullish, and the price of the gold is going higher. We said that we don't believe that the upswing will stop on 23.6 Fibonacci level. We are seeing a level higher here. The price is aiming a horizontal resistance located slightly above $1,200 per ounce. It seems like a strong resistance, but the price can go $10, $14 higher. Why is that? Because we do have 38.2 Fibonacci level of the biggest downswing. Slightly below, we have 38.2 Fibonacci level of the midterm downswing, but also we do have a potential correction equality pattern, which is here. So in our opinion, maybe let me change the color of this rectangle. Let it be like that. The price can aim this rectangle and make a first reversal here. If the price will break this level, that will mean a trend change here on gold. That will be an overbalance here, so the price will make the biggest correction of all of them. That will mean that the trend changes. Right, so we were bullish on gold. We are still bullish on gold. As you can see, new day, new highs. Last 3 days, very bullish. New highs every day. So this is a great week for buyers on gold, as you can see here. But also, look at that. We had 3 weeks in a row of an upswing and a downswing. We have 3 weeks in a row of a downswing so far. Maybe this will be the trigger here for a long reversal. If you will see a bearish reversal pattern on this resistance, that will be a great gift for sellers. And even if in the long term we consider ourselves gold bears, bulls, we will have to admit that there will be a bearish pattern, and maybe we will enter the position with the midterm short order. If this is the situation on gold, let's see how silver looks like, because we all know that they like to come together. There is a high correlation between those two instruments. Silver defended important support on $60 per ounce, and now is aiming this horizontal resistance, which looks quite strong. It's not only tops from 7th of December, it is also a support from 7th of October, but also a support from the second half of June. So that can be a strong resistance here. Next one will be a trend line here. Let's see how the Fibonacci's work. Yeah, so actually this level, this area here can be a strong resistance. The same happens on gold. So on those two instruments, still we have some place to the area which is considered as a potential strong resistance. Next instrument that I would like to show you is a cable. A cable is about to make new lower lows, but before that they need to go through this support. This support labeled with the green color on 1.21. It was a support from 11th of October, also from 25th of October. We had a first contact yesterday. This created a hammer candlestick on a daily chart, which can be considered as a buy signal, because hammer on a support is a buy signal. But it would be nice to wait how the situation will develop today, because if we will have a hammer again, that most probably would create a double bottom formation. Also would be a confirmation that this support is strong and should be defended. Let's see how the situation looks in a short term. Yes, we do have a potential double bottom formation, even triple bottom formation. For that, what do we need? We need to see a price above this resistance. Let me also show you indicators. MACD, there is a divergence, obviously. RSI, I bet there is a divergence as well. Yes, there is. As you can see, price making lower lows here. MACD is not. RSI is not as well. So there is a divergence, but to use this divergence, what you should see is the price here, maybe a little bit lower, right? So this triggers buy signal, this triggers reversal on cable. Let me highlight that with this color. If we will see a breakout here, that will be just a continuation of a sell signal. Simple as that. Another interesting instrument is Euro to Japanese yen, where we do have a correction equality. But We also stopped on 38.2, but this does not look like a reversal pattern. It looks more like a continuation pattern. What do we have here is a pennant. Pennant is a trend continuation pattern, so the higher odds are for an upswing. But again, you're here to trade and earn money on the movements. So it also can happen that we'll have a bearish breakout, and it can also be a great opportunity to sell. But I wouldn't sell now. I would sell once the price would get here. And the price, in this way, the price will make new lows. Maybe green is not the best color. Let me change that, for example, to black. That would create a nice selling opportunity if the price would go here. At the same time, buyers should wait for a breakout here, or they should wait for a bullish upswing and a breakout of the upper line. Euro to Australian dollar, one of our favorite instruments. Let me explain you that in a greater detail because it's a great thing. Actually, we wrote an analysis for this instrument in investing.com. Let me even show you that. Just bear with me. Give me a second. Yes, so guys, as you can see, we tweeted that on our Alpari Research and Analysis Twitter account. Euro Australian dollar for investing.com, good technical setup. This is the link. Strong technical setup on the euro to Australian dollar, and we gave here a sell signal, sell signal 1.44. Now we are close 1.44, 185 pips lower, almost 200 pips. Let me explain you why we gave sell signal here. Well, we do have a higher highs and lower highs and lower lows. So this shows us that we do have a downtrend here, right? First of all, simple as that. Then we went below 1.44 support, which is this gray area here. We created a rectangle. Rectangle is a trend continuation pattern. Rectangle is this yellow area. So we were anticipating that the price will go significantly lower. But then there was a breakout. Surprisingly, it was a bullish breakout. But what had happened, it showed us that it's a false breakout. It was a false breakout. The price touched the trend line, bounced from this trend line with two shooting star candlesticks. This all is a false breakout above this resistance. It's a false breakout from the technical pattern. And you know that false breakouts usually leads to the movements in the opposite direction. And that's what's happening. We do have this position open in our live trading account. This position, well, you have everything explained right now, right? But I will show that position on our live trading account on our live seminars that will soon start all over the world. So now the price is approaching most probably the lower line, the support here, okay, somewhere here. So we should get like 100 pips lower. Most probably it will happen with the correction somewhere on the way. Right, so still bearish signal, sell signal is on. This movement should be continued. But it makes, it gives signals that Australian dollar should be stronger. So what happens on Australian dollar to American dollar, where we were saying that there is a potential place for a reversal here? It's not happening. So as you can see, well, we had a nice sell opportunity here. We had a nice sell opportunity here. But here, the signal was actually created because we saw a weakness. We broke this, this horizontal support, which activated the sell signal. Here, we didn't have that. What happened here was a constant pressure. So the price was going a bit lower, but was advancing higher again. Going a bit lower, but advancing higher again. So this trend line didn't work. This trend line was finally broken and used as a support. 50% Fibonacci level was finally broken and used as a support. And now 61.8 Fibonacci was broken, and now most probably it will be used as a support. So here there was a nice potential for a reversal. That's what we are saying. Obviously, we are saying that there should be a short position here, but only if you would see bearish movement on the resistance. We didn't have a bearish sentiment, bearish pattern on the resistance, so that meant that the demand for Australian dollar is quite high. Australian dollar is highly correlated with gold. Gold is advancing higher, so Australian dollar is a bit stronger. We wrote an outlook for 2017, and actually in our view, Australian dollar could be one of the strongest currencies. Maybe they won't be much higher than they are now, but they won't be much lower, right? They shouldn't decline sharply. Why is that? Because we do believe that gold will be higher, and we are aware of the fact that Australian dollar is highly correlated with the price of the gold. So if the price of the gold is going higher, Australian dollar to American dollar should go higher as well, right? So the next resistance here is this place. I don't think the price will get there straight away. I think there should be a small correction. Is this a good place for a correction? On the paper, yes. Where is the next good place for a correction? It's here. Right? American dollar to Canadian dollar. Here, side trend continues. Side trend, remember, we were talking about that yesterday. Side trend is located above the support. So far, if you would see on the bouncing from those supports, you can see that it happens almost instantly, as we were saying. Bounce, contact, bounce, contact, bounce, contact, bounce. And now we are having a side trend here. The price is not actually bouncing. Maybe we'll have a breakout. That is why yesterday we draw this two lines. There is a support. Maybe I will delete this one. Nice occasion for a sell stop. Nice occasion for a buy stop. If the price went higher, if the price will go higher here and break this rectangle. There will be a bullish breakout. That would mean that this lower line of the flag works and the price should go higher. If we would have a breakout here, that will be a start of a new bearish wave, and from my side that would be more than welcomed. This kind of movement. This kind of movement would be very technical in the long term. And from the price action here, I would assume that for now, bearish breakout is more probable than bullish movement. Euro to Canadian dollar advancing lower because euro is quite weak. Maybe let's start with euro. As you can see, they bounce from this line connecting recent lower highs. It started in the middle of December and now they are approaching horizontal support. I don't like the situation on euro dollar. Again, it is not technical. I don't know why people stick to euro dollar. Well, maybe they like it, maybe they feel like they know fundamentals about Eurozone and America. I do not. What is more, as I'm a technical trader, price action trader, I do not see any good opportunities here on euro dollar from the technical point of view. Right? What I see here is a side trend, boring side trend, without any interesting occasions whatsoever. Euro is weak against most of the currencies, like here, like here, like here, but is much stronger against pound, because pound is weak, as we saw. So we broke the horizontal resistance, we made a small correction, and now it looks like the price will advance higher. There is a small chance that candlestick from yesterday will be a signal for a reversal, because candle from yesterday is a shooting star, so it creates left shoulder, right head, and possibly a right shoulder here with a possibility of a breakout. But obviously head and shoulder formations in this early stage of development are so fragile that I wouldn't even consider it as a potential formation. But still, better be safe than sorry, better be aware of this formation before we would see a breakout of the neckline. So now we have a thing that we can look at, especially like if we connect this resistance from August, from September, from the middle of November, we can see that it acted as a resistance now. So maybe we'll see a small retracement here, 80 pips retracement to this support. We'll see. New Zealand dollar to Japanese yen. They defended the support. So, in my opinion, sell stop won't be a bad idea in this case. New Zealand dollar to American dollar. New Zealand dollar, as you can see, is not so strong as Australian dollar. What we do have here, yes, we are above a horizontal resistance here, but we're having a side trend. The price is not advancing higher so sharply as Australian dollar is. I wouldn't open position right now. I would just wait for a breakout. Either bullish breakout or a bearish breakout. Australian dollar to Canadian dollar, although they went below this horizontal support, now the price is pushing higher, and most probably that's the end of a decline. We do not have a significant trend reversal pattern, in my opinion. We can delete those lines, they are not giving us anything anymore. What we do have here is this line, was broken, fair enough. What we can have here is a Fibonacci. I would say that we can think about trend reversal once we'll break this horizontal resistance here. If we'll break 23.6, most probably we will get there. So even a breakout of 23.6 can give you still 80 pips. If you're satisfied with this kind of movement, feel free to use this occasion. Australian dollar to Swiss franc, nothing interesting. Canadian dollar to Japanese yen. As you can see, still waiting for the breakout. Two scenarios, the price stays in the same place, so there's not much I can tell you about this instrument. Euro to New Zealand dollar, euro is weak, so the price is going lower. This is a pennant after an upswing, so in theory you should see a bullish breakout, but it's not looking so strong right now, so probably we'll see a bearish breakout. So far it looks like that. Mexican peso, lowest, weakest on the record here. As you can see, ahead of the Trump speech, investors are not very optimistic about Mexican peso. You cannot blame them. American dollar to Japanese yen, closed in a wedge formation, still no signal. And let me change the accounts that I will be able to show you Brent, because on Brent there is a possibility for a reversal. Obviously we'll have this data which will be important for oil traders in 3.5 hours. From the technical point of view, it looks like a double top formation. First one, second one, we have a breakout of the support, this blue line. We have a divergence on MACD and RSI, relative strength index. It all together gives us a sell signal, as was our sell stop posted here, and as you can see, it would give us profit. If you're still not satisfied with this kind of price action, most probably a breakout here would be better for you. Once the price will get below this horizontal support on $53.5 per barrel, that will be a strong sell signal on oil. And let's go to NASDAQ. As you can see, ahead of Trump's speech, ahead of Trump press conference, traders on American Stock Exchange are very optimistic, but they are optimistic for the last few years. So we shouldn't be surprised, they are always optimistic. So we're heading for new highs on NASDAQ. Okay, let's come back to the other account. From those, just for a recap, bullish on gold, at the same time bullish on silver. Here, waiting for a breakout, bearish, no signal here, waiting for a breakout, but more bearish, waiting for a breakout, no signal, waiting for a breakout, bullish, waiting for a breakout, bullish, waiting for a breakout. That's our outlook on the market. As you can see, we have some on a few instruments we defined the direction that we want to follow, and on many instruments we are waiting for a breakout. So next week should be very interesting. We should get some nice trading signals. Hopefully it won't be false breakouts. It will be, hopefully they will be all legitimate, but it's always a risk of a trader. But I hope you will stay with us and we will be able to see that together next week and maybe earn some money on it. Thanks guys for watching Daily Analytical Report. Remember that trading and investment in financial markets involves an element of risk. And again, follow us on Twitter and our website alpari.news. You saw our Twitter, you saw that we were posting our trading ideas in advance and they do work out. Right? So stay in touch with our latest publications. Thanks very much. And in half an hour we'll have a webinar about trading psychology, very important topic. Thanks.